Hello everybody, Brian here, quantlabs.net. Today is 3/49, March 17th. We're going to talk about the Fed raising interest rates earlier today or yesterday, impact if it has on crypto, namely Bitcoin. Let's give you my thoughts on it. So I'm going to start with the best article here. We've got about 6 articles from I believe 4 media outlets. So let's start with the best article out of the bunch. These are all from the last 24 hours. So this is CNBC. Article is Fed interest rate forecast signals willingness to sacrifice growth to stop inflation strategist says. So let's first talk about the situation that the Fed is in. Reading these, they don't talk a lot about bond buying into the equity markets to keep things afloat. But this article is quite interesting. So they're going to do 6 increases, which could take it about 2+%, which is still like disgustingly low. But I know a lot of people, myself, that are really addicted to this easy money and actually have over-levered themselves when it comes to mortgages. So for every 1/4%, you're going to have 6 of them. I can imagine where they're at right now, and I think it'll affect the real estate market overall, or at least slow it down, put it into a plateau. That's just my personal view from the get-go. So here's a 10-year Treasury yield bond chart. It goes up, and that's good. I guess that's what you want to follow. So let me just see if I can find the one chart, because it shows a chart of the effectiveness of, let's see if it's this one. It has to be this one. Yes, it is. Okay, let me just show you. So here's another CNBC article. Federal Reserve approves first interest rate hike in more than 3 years. Sees more 6 ahead. That's the key right there. 6 new upcoming interest rates. So at 25% or half a point, what's it going to do to the overall market? Here's the chart that really matters. So if you go back to the 1880s and how the interest rates went up to 18%, you can see here that it was 0 from roughly 2010, from that severe decline of the financial system, to here where there's no activity, and they started to increase it, drop it when it had that tantrum, temper the interest rate tantrum, and then here it they just raised it again. So March 1st, 1/4% is the latest there. So if that's the case, you might be at 1.5. So that'll take you down to where? Roughly mid 2017. It's ridiculous. I mean, the difference between that time and now, only about $30 trillion, and the other big one is inflation. And only inflation kicks in when the debt of a country is too high. So you can see here where it's coming from. During this time we had high inflation, or coming out of high inflation, and really stagflation as well. So that's the aftermath. They had to raise it all the way up to 18%. Here you can see the effectiveness. It's just not there, and it's going to get harder for the U.S. to maintain its status on the U.S. dollar, as well as the only ones that really reap these benefits from the extra liquidity being pumped in the market is the wealthy, who participate in this and take advantage of it with the extra liquidity in the market. Good on them, I guess. But for those that don't have the cash, oh well. So here's the problem. They've been pumping money into the economy. It's really not really done well, no matter how you look at it. People argue that, whatever. And the other thing that people don't really understand is that the amount of billions and trillions of dollars that were pumped in the interbank funding to keep the banks rolling over the last 2 years. No one talks about that. Nobody talks about the bond buying, which does not make any sense to me. It's like an incestuous relationship. But again, these type of articles from CNBC and all these other ones, they don't talk about this. All the important stuff that really matters and why they're where they're at. But at the end of the day, let's continue along here. Anticipates that ongoing increases in target range will be appropriate. Against China? I don't know, man. And if Saudi actually does switch their oil purchases from the petrodollar to the petro yuan, the U.S., that's going to take away a lot of the influence that the U.S. dollar has. Jerome Powell hinted at post-meeting that the balance sheet reduction could start in May. I think it's too late, and the process could be the equivalent of another rate hike this year. I think that's the plan, but if there's a war or anything like that, I don't know. The indication of about 1.75 basis points this year was the call. So they have a dot plot thing, blah, 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 blah. We are attentive to the risks for further upward pressure on inflation and inflation expectation. Committees determined to take measures necessary to restore price stability. This is a crock. U.S. economy is very strong and well positioned to handle tighter monetary policy. I'm not sure about that. That's why the markets have been tanking so much since the beginning of the year, because of this inflation and the so-called shortages. I just find that all the timing's bizarre. There was a chart I'll show you on the inflation. Monthly inflation. So, Ukraine war, invasion of Ukraine by Russia, of course, that threw it off. I don't deny that. U.S. economy are likely highly uncertain, very true. No doubt in that. Near the invasion and related events are likely to create additional upward pressure of inflation and weigh on economic activity. So here's the 10-year Treasury. It's gone up. They've gone past their 2% target, which is good, but I think they want to maintain the 2%. Ultimately, they come through with a clear message that the Fed has a path forward to continue to tighten response of this overwhelming concern around inflation. Remember they said it was temporary? That's all I can tell you there. Transitory. Policy last year dismissed transitory before capitulating. Wow. So unprecedented levels of fiscal and monetary stimulus. $10 trillion, man, since this global sickness started 2 years ago. Unreal. Here it is. So here we are. Again, 1980s, the inflation was high because of interest rates. So they had to raise, as you saw earlier, 18% at the time to fight that inflation. This is worse off than, I can't really say, think Venezuela and Zimbabwe. Here, 2020 inflation, September 1st. This is like before the new administration, so it's fairly controllable. And it just starts to spike. Funny timing, eh? And then here it is, May 1st, 4.9. Last year, 5.3, 5.2 last year. Now it's at 7.4. No signs of this coming off. And for a while they just said, it's just transitory. That was a chart I wanted to show you. Anyways, I could go on about it, but let me show you some of these other articles. Forbes. I live by charts. Here's Forbes. Federal Reserve long-awaited rate hike is here. Powell announces 0.25% increase. Just going through the highlights here. It's probably redundant. 40-year high, 7.9% from a year ago. 6 more in 2023. I think they're not going to do it. I'm just going to see so many unforeseen things. But they may have to fight inflation. It's grandma's savings, screw that, which they've already depleted over the last 10 years. Or inflation, well, kill her off anyways, because now she can't live, because it's too expensive. Central bank has now had a consensus federal fund rate of 1.9 by the end of 2022. Anticipates, key word there. And ongoing increases in the appropriate target rate will be appropriate. We're not even factoring in what the stock market does, which obviously we've seen the last 2-3 months. Let's see, more aggressively. Prepared to raise interest rates more aggressively. Oh, man. Crock. U.S. GDP growth this year falling to 2.8% from a previous forecast of 4%. Man, this is mismanagement. What to watch for? Will unwind its massive balance sheet. Really? How are they going to do that? Begin reducing its holding of Treasury securities and agency debt and agency mortgage-backed securities at a coming meeting. That's what they've been doing. I'm glad Forbes kind of mentions it, but not in a weird, twisted way. Well, actually, it's a quote from Powell. But that's what they've been doing, buying up Treasury bonds. It's incestuous right there. Other debt of other agencies and mortgage-backed securities. And I think they've been buying into equity as well. Okay, here's the smart guy. This is the only sensible guy. James Bullard wanted a 0.5% increase. I don't know, man. It's just, I could go on about it. I mean, the stock market changed, so that's what I'm going to get into now. How did Bitcoin, how did it respond? Check it out. This was kind of a joke. Right here. So my moving average, weighted moving average on the top 12 coins, hourly moves right here. So right here, yesterday at around 3 o'clock, it's negative, super negative, right? So it didn't respond too well. Still super negative at negative 1.05 at 3:30. Then it spikes again. Guess those algorithms kicked in at, let's see here, at what time? 16:11, 4:11. And then dropped back quickly at 16:48. One of these articles said it was a head fake. Really, imagine how your bot must have performed. There's no fundamental to this. It did respond, but it just goes to show on how sensitive now crypto is when it comes to these rate hikes. Absolutely amazing. But yet, this is the typical malaise that I've been seeing. This negative. Negative 1/3, and it went back to negative again. That's the normal pace of the top 12 coins. So let's go to this article here, CoinDesk. Here's this article here. Let's see here. So this article is Fed raises benchmark interest rate by 25 basis points. The prospect of higher rates has weighed on Bitcoin and other risky assets. And personally, it shouldn't, because it's a hedge. Right? That's how it used to be. But there's so much institutional capital now, as I keep saying, with these institutions now investing so heavily into crypto. So it's now tied back to what goes on in the mainstream economy with the stocks and other mainstream news events. So in the so we already gone on about these implications. You can see here. So we're gonna have another meeting in May. CPI, as I said, is at 7.9% for monthly inflation in February. That's a lot. The producer price index at 10% in February. Is your salary able to keep up with that? So here we go now with crypto. Crypto traders were wisely watching the Fed's policy statement. The prospect of what could be a prolonged series of rate hikes or balance sheet reductions, which will be both, or both, have been a headwind for the digital asset price, particularly for the price of Bitcoin. Here's some expert. I'd say that the market is not going to react to the rate hike, but will likely react very sharply to anything said in the statement. Okay, that's possible. I wasn't there when that event happened, when that big spike happened of like 2-3%. That indicates a change in the quantitative easing exit scheme or the state of quantitative tightening. Bob at Path Trading Partners. Equity markets do not suffer that all that often or all that much during rate hike cycles. Well, what about that tantrum that the market had when they were trying to do it a few years ago? Only 0.25%. The market's tanked. I'd expect the same thing for cryptocurrencies in general. Again, I don't know if that's right. BTC was trading before 40,000 and still within range of swings that occurred during the trading hours. Well, you saw that pop that I showed you on the top 12 coins. That's a big pop. Whether a central bank will go with a 25 or 50 basis point at its next meeting in May, which would bring the rate to as high as 1%. Amazing. Yeah, there's a little dot plot thing again. Blah, 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 blah. So I could go on. They see 2.8%. So I've already talked about that for the economy. Next article. This one is Forbes again. Given the wide set rate scenarios, here's what the Fed is watching. Let's see if we can glean through this. I don't want to bore people. Financial markets, Ukraine, supply chains. Now, I can verify that. I was just in a Audi car dealership. Half the models are gone, which tells you why. They said, oh, shortage in the parts. If you want a Porsche 911, you have to wait 2.5 years to get it because of the parts. So maybe the parts factories in Ukraine got blown up. I don't know. Yet the job market, inflation are likely to be the primary factors, and the data the Fed watches more closely. I think there's going to be a major market slowdown later on in the year. Extremely tight, with people having a hard time hiring, currently leading in part to its assessment. People don't want to work because of the job conditions, and I hate to say it, they've been spoiled for the last 2 years. The fact there are 1.7 job openings for every unemployed person and other factors all pointing just how strong the U.S. job market is today. Powell will never say that the U.S. job market is too strong, but he talked about economic growth ahead of trend. Just how the job market was, Powell implicitly made it clear that he felt the Fed priorities more skewed to managing inflation. That's his highest priority. Forget people if they're employed or not. If they're not able to keep up with the inflation of just everyday costs, that's the Fed's primary job at this point. He might appreciate slightly less jobs in the extent wage growth. Man, I'm not gonna get into this. It just, to me, it's all like a pack of lies, or either one of two things. You're either highly ignorant of this, or you're lying. And I'll lean towards lying, because I've had Python scripts, so I used to follow the Fed data for years, and all of a sudden they stop. And this is like same data that be tracked since the 40s. They stop the data, start a new data set to make the data look better. That's why they get rid of it since the 40s. I've got numerous data sets that I can talk about. There's manipulation going on here from the Federal Reserve, without a doubt. Today's crypto boost, the Fed inflation, and the global adoption. So this is now newsbtc.com. White hikes, crypto reacts to the Fed. See what these... this is a daily chart. Oh man. The Fed is lagging behind, and the move will not affect the economy. That's true, they're lagging behind, but of course, because of that, it will affect the economy. Not worrying about the U.S. economy, really. Really. If they weren't worried about the U.S. economy, they wouldn't be raising interest rates because of inflation, and that does affect the U.S. economy. You got the only worthy article out of this lot, from what I'm seeing, is CNBC. But certainly flourish in the face of accommodation monetary policy. Is a strong economy, and that will be able to flourish. Ask the general person out there in the street if they're flourishing in this economy. Investors might take refuge in Bitcoin. It's been flat. It's been range bound. As it happened before, it's expected to remain by 4.3% by the end of 2022. Wow, how is that possible? Do you not realize that the debt will still be probably even higher? Probably be $31 trillion. How will the inflation go down when you have that kind of debt? Really? I mean, who's writing this stuff? They don't really understand the economics here and what's driving that inflation. Keeping savings in the bank only means loss of purchasing power. That's true. I give you that. As a result, many people start to see Bitcoin as a hedge. There is no hedge with Bitcoin. It's just not there. Winklevoss, the co-founder of Gemini, imagine paying a manager 7.9% to do absolutely nothing with your money. That's what inflation is. It's a hidden management fee that comes with no return. Today, if you hold USD cash, you're paying the government to do nothing with your money. Scary. The better way to explain it is if you have 7.9%, consider that an extra tax you're paying because of the ineptness of the U.S. government. That's what really inflation is. And you gotta, if you're self-employed, you gotta work 7.9% harder to keep up to pace with that inflation. Imagine if you're on a fixed income thanks to jobs. Absolutely amazing. But what would you expect from a Winklevoss, of a billionaire? They probably don't know the difference between this type of food and that type of food, because they ain't buying it in the grocery stores like we do. They probably have got 3 custom chefs on tab. Look at this. They have received over $108 million. This is Ukraine now. Crypto assets reportedly. Citizens have been able to use digital coins as a tool to safety to take their funds with them, fleeing the country. I guess they have not seen what the Russians have been doing. They've been doubling, I would even say tripling their money before this war started. I've gotten webinars on that. Look at waves. Look at Bitcoin and Ruble on Binance. Check out the charts. Virtual assets, legalize crypto, I'm all for it, but the signing of this law by the president is another important step towards bringing cryptocurrency sector out of the shadows and launching a legal market. Okay, I'll give you that, but is that out of desperation? I mean, I don't know if they're allowed to trade Bitcoin and crypto in Venezuela, but they haven't banned it at the same time, I don't think. Actually, they have their own digital currency. Anyways, I mean, the only article that makes sense to me is this very first one. That's why I went with it. Anyways, you see the ineptness, you see the either holding back outright lies or the ignorance and all this stuff. It just doesn't make sense. As I said, as long as we have the inflation, the debt that we have, and I'm gonna just keep pounding on about this. Here's the U.S. debt clock you can take a look at, right here. Okay, this is the real state of the U.S. economy. There it goes, $30.3 trillion right here. You got 332 people in the country, and 125 that pay tax. Okay, that's the reality. Will that change in the next year, or even by the end of the year? This will be higher, the U.S. national debt will be higher, and this will be much, much worse. Okay, so that's how I see it. As long as this happens. The only way to reduce this is if the Americans went to war. That's it. We'll leave it at that. Thanks for watching. If you're into this, get in touch with me at quantlabs.net/contact. Get on our mailing list. We shall talk to you later. Thanks for watching and listen to me rant and rave. We shall talk to you later. Have a good day.